For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Nvidia has emerged as a significant player in the rapidly growing field of artificial intelligence, benefiting immensely from the soaring demand for related technologies. Over the past 2 years, the company's market capitalization has skyrocketed from approximately $424 billion to an astounding $3.1 trillion, making it the second largest company in the world, trailing only behind Apple. The company's graphics processing units are indispensable tools for training large language models, which serve as the foundation for generative artificial intelligence. As a result, major technology firms and cloud service providers are eager to acquire as many Nvidia chips as possible to enhance their capabilities. Despite the spotlight on Nvidia, it is essential for investors to recognize that it is not the only opportunity in the artificial intelligence sector. Many other companies are also making significant strides in this space, and some may have even greater long-term potential than Nvidia. In fact, 3 companies stand out as contenders that could potentially surpass Nvidia's market value over the next 3 years, given their unique positions and strategies in the evolving landscape of artificial intelligence. One of Nvidia's largest customers is Meta Platforms, which has made a substantial commitment to Nvidia's technology. Chief Executive Officer Mark Zuckerberg recently announced plans to acquire 350,000 of Nvidia's H100 graphics processing units by the end of this year. This significant investment reflects Meta's ambitious strategy to integrate artificial intelligence into its various products and services. The company's capital expenditures are projected to range between $37 billion and $40 billion this year, placing it in competition with major public cloud companies like Microsoft and Alphabet. Furthermore, management expects capital expenditures to continue rising in 2025, indicating a long-term commitment to enhancing its technological capabilities. This multifaceted approach is likely to drive robust revenue and earnings growth over the long term, even as the company faces increased depreciation expenses from its investments in data centers. Importantly, as Meta refines its understanding of how much data center capacity it requires for training and deploying its generative artificial intelligence developments, the pace of spending is expected to moderate over time. Currently, Meta's stock trades at a forward price-to-earnings ratio of around 26, which is considered reasonable given its growth potential. However, if its generative artificial intelligence features successfully increase advertising prices and engagement on platforms like Facebook and Instagram, while also unlocking new revenue opportunities through business messaging and artificial intelligence assistant interactions, the company could outperform earnings estimates. With a market capitalization of approximately $1.35 trillion, Meta is well positioned to experience rapid growth that could allow it to surpass Nvidia within the next 3 years, particularly if one of its artificial intelligence initiatives yields impressive results. Another key player in the semiconductor industry is Taiwan Semiconductor Manufacturing, commonly referred to as TSMC. When Nvidia designs a new chip, it relies on TSMC to manufacture it, showcasing the essential partnership between these two companies. TSMC's competitive advantage lies in its scale, as it captures over 60% of all spending on chip manufacturing. This substantial market share provides TSMC with the financial resources necessary to reinvest in its capabilities, allowing it to produce faster, more powerful, and more energy-efficient chips. With its cutting-edge design capabilities, TSMC maintains a dominant market position, as chip designers find it challenging to achieve results similar to those of other manufacturers. What sets TSMC apart is its flexibility in chip production. The company can manufacture Nvidia chips just as easily as it can produce custom-designed chips for other tech giants like Meta, Microsoft, or Alphabet. This versatility places TSMC in a more secure position than Nvidia. Many of Nvidia's largest customers have developed their own chip designs specifically tailored for training and utilizing large language models. While these proprietary chips may not offer the same level of flexibility as Nvidia's offerings, they are often more power efficient and cost-effective, making them increasingly attractive to companies like Meta, Alphabet, and Microsoft as they scale their artificial intelligence development efforts. As TSMC continues to benefit from the growing demand for chips and the heightened competition for its limited resources, its shares currently trade at around 26 times forward earnings. However, some analysts argue that TSMC deserves a higher earnings multiple due to the strong demand and competition that should positively impact its bottom line. In contrast, Nvidia's shares trade at a forward earnings multiple of 48. If TSMC experiences multiple expansions while Nvidia faces a contraction in its valuation, TSMC could ultimately surpass Nvidia's market capitalization over time. Lastly, we have Alphabet, which is the parent company of Google. This company is another formidable player in the technology sector. Currently ranked as the fourth largest company in the world, Alphabet's market capitalization is approximately $1 trillion less than that of Nvidia. However, there are compelling reasons to believe that Alphabet may experience faster growth than Nvidia in the future. At the heart of Alphabet's business is Google Search, which, despite facing regulatory scrutiny, is unlikely to lose its status as the most popular search engine worldwide. This dominance ensures that Google remains a crucial component of marketers' advertising budgets. Furthermore, artificial intelligence assistants such as ChatGPT or Meta AI are not as significant a threat to Google as investors once feared. Google has effectively utilized its own artificial intelligence based on its Gemini large language model to provide direct answers to numerous search queries, linking users to relevant sources. Management has indicated that these artificial intelligence overviews have resulted in increased search usage and higher user satisfaction. Moreover, Google is harnessing artificial intelligence to explore innovative ways to enhance search functionality, including the ability to take videos with mobile devices or highlight content on applications or web pages. These advancements are expected to drive increased usage and engagement with Google's services. Additionally, artificial intelligence has the potential to significantly expand Google's cloud platform, which recently surpassed $10 billion in quarterly revenue for the first time in the previous quarter. Google has secured numerous high-profile customers, including Apple, for its artificial intelligence development platform on Google Cloud. Its Gemini for Workspace software is also contributing to an increase in average revenue per user and attracting new customers. To support its ambitious growth plans, Alphabet is making substantial investments. The company anticipates spending approximately $50 billion on capital expenditures this year, primarily focusing on servers and data centers. While this investment may take time to yield returns, the potential payoff could be substantial as Alphabet positions itself ahead of the growing demand for artificial intelligence development. The Google Cloud platform could evolve into a more significant revenue stream, complementing the company's core search business. With shares trading at just 22 times forward earnings, there is considerable room for multiple expansions. This is particularly relevant when considering that Alphabet's bottom line is expected to sustain high growth due to significant share buybacks supported by the company's impressive annual free cash flow. It is somewhat surprising that investors have not yet assigned a higher valuation to Alphabet compared to Nvidia, given its strong growth trajectory and robust market position. In a summary, while Nvidia has undeniably reaped the rewards of the artificial intelligence boom, investors should not overlook the potential of other companies in this sector. As the artificial intelligence landscape continues to evolve, these companies are well positioned to capitalize on the opportunities presented by this transformative technology. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.